Matt Orton is with us, Chief Market Strategist at Raymond James Investment. Matt, good morning. Great to have you with us here. Thank you for your time. Again, it's like a cost of a toy, right? Whether he'll go big on day one or whether he'll stagger some of his actions over the next many weeks. What's your sense, Matt? I'm talking about Trump,
good morning.
Just in case you're confused.
Of course, yeah, I assumed as much. Good morning. Always great to join you. Yeah. And I didn't even think it's a coin toss. I think he's going to go big or go home. I think that's how Trump acts, and I think that's what everybody is expecting. We're expecting to see 150, 200 executive orders over the next 2 days. I don't expect those are going to be drawn out, and I actually think they're going to be very informative and hopefully will help bring down some of the recent volatility that we've had in the market. So much of the backup in rates that we've had in the US really since the election has largely been the result of expectations, speculation around what Trump policies might do to the inflation and the growth backdrop in the United States. And I think we'll get a lot more clarity with respect to what that's going to look like. So I actually think it's going to be encouraging progress. Plus, you have the backdrop of a very strong earnings season so far that's taking place in financials. I think we're going to continue to see that play out. So my expectation is that we're going to see a little bit more normalcy, hopefully a bottoming, moving through time and consolidation, maybe a slight uptrend starting to develop again. But I'm optimistic that the clarity we'll get will help markets settle and be able to build a base on which they can rally.
Okay, all right. Matt, hi, good morning. So you are, holding on to hope, being optimistic. Let's talk about India, because how do we sort of deal with all of this? There's been the rise in the dollar, the weakness in the Indian currency, and then, of course, our own issues around the slowdown. You've usually been very optimistic in the Indian market. So the last couple of weeks, have you been nibbling in or staying on the sidelines? What's the call?
Yeah, good morning, Surabhi. It's been tough. It's been a tough drawdown. It's been almost 12% down from the top. I've been nibbling in companies as the market's been going down, which has paid off to a large degree, especially in high quality names. We've talked about some of them, financials and autos like ICICI and M&M. I think there's a lot more opportunities. I built a position in Bharti Airtel, which is another very high quality asset, a good compounder with respect to its growth, free cash flow going forward. So I think there are select opportunities. What I would caution investors right now is we're kind of in technical no man's land. It's very tough given a macro backdrop that has a lot of volatility, especially one that's a little bit more sensitive to currency movements and an overall just growth question mark. I would be careful. I would rather be a little bit later and make sure that some of the technical trends are confirmed if I'm looking to get into names I haven't been in before, or if I don't already have an established position. I'm comfortable giving up a little bit of that upside. I'm still very constructive on the overall macro backdrop for India. It's still my largest country overweight outside of the US, but I've been reticent to add too much more right now until I know where the dollar is going to go. And I think if we see a bottoming in the strength of the dollar, at least for the near term, that's going to give investors some time to pause, for the market to rebuild the technical foundation, and then hopefully we'll continue to see some good earnings from Indian companies. And I think that will be the mark to start to see some more upside.
Indeed. Hi, Matt. Morning. That dollar index cooling off is something that the bulls out here will be hoping for. And in the last time around, actually, the dollar index cooled off. Once he took office, it ran up ahead of that and then it cooled off. Matt, I wanted your view on this. The Trump having a conversation with the Chinese ahead of this big event. What if he doesn't do what people expect him to do to China? Do you expect some money to flow towards China then in that case? And that could, in fact, be a mild negative for India. Do you see that happening? Or do you believe that India still will be top bet?
Yeah, Nigel, it's a very interesting point. And I think that goes to my somewhat contrarian view that I don't think tariffs are necessarily going to be as bad as many investors are expecting. I think this overture to China, inviting China and Xi Jinping to the inauguration, I think it's an olive branch for what we're still going to see some fairly serious tariffs enacted at the very beginning, but hopefully it's a position to show that Trump is very serious about negotiating and coming to a better place in a short period of time. And there's a lot of things going on with TikTok, some very important restrictions that have been put on Chinese tech companies more recently. So there's motivation from Beijing too. And I don't necessarily think this time around it's going to be all flows going back into China. I think what it will show is it's going to be broader perspective for how Trump is going to approach tariffs. And I think that might give investors who are looking to diversify overseas more confidence that perhaps the worst assumptions of tariffs might not necessarily play out. So I think it'll give a little bit more confidence for investors to start wading into emerging markets, some international developed markets that have been beaten up, that look like they're trading at a very big discount, like India right now.
All right, Matt, hope to speak with you soon again. Thank you very much for joining us. It's a pleasure, and really appreciated your thoughts on CNBC TV 18.